The recorder is on. Okay. All right, let's get started. This is going to be a long one. Coming up on earnings season, starting Tuesday, but really tomorrow, Pepsi reports. We'll go over that in a minute. Earnings season is lurking just around the corner. And let's start with a disclaimer. Trading involves the risk of loss of capital. Make sure you know what you're doing. Make sure that you know that you are in charge of your trades. Don't follow others. Make sure you know what you're doing. A little bit of background about myself. I'm an ex-fighter pilot with master's degrees in both business and computers. Active trader since '98. Full-time since 2009. Technical, but I use some fundamentals. We'll talk about that. Coming up here in the earnings season, I moderate H&R candlesticks and fill in from time to time. And I do one-on-one mentoring for those who are so inclined. Stick around to the end. We've got some special offers at the end of the presentation. And tonight's agenda, we're going to start off with a lesson of the week. I started this a couple of months ago. I got good feedback that people liked it, so we're going to continue to do that. It makes it a little bit longer on these presentations, but they are recorded. They are posted to my YouTube channel. And I think most people will find them useful. Identifying the best trades. We'll go over the economic and earnings calendars, market overview, some trade ideas, some Q&A on not specific stock specific stuff, and in time permitting, we'll look at your stocks one per person, and we'll hold that strictly tonight if we even get there. I'll try to talk fast. Trading earnings. Earnings are a reason for stock to gap. So this is kind of a combination of earnings and gap plays. Now, I don't do earnings beforehand. I do not try to predict. I used to try to do things like iron condors and whatever, but the volatility, all you have to do is be wrong maybe 1 or 2 out of 10 times on an iron condor, and you've thrown away all of your money. So, thanks, Ed. So I will cover, the reasons, but primarily it's earnings. And then why would you be interested in the types of gaps there are, but that's really less important than the considerations, the trading plan, and I'll go over some examples. There we go here. Why did they gap? Well, scheduled events to include earnings, conference calls, or conferences, that they present at, market reports, unscheduled events like upgrades and downgrades from analysts, earnings guidance and warnings, which happens usually about 2 to 3 weeks before their earnings report. If you get inside 2 weeks, they're probably not going to surprise you with a change. And after that event, price will fall or rise to meet the supply demand, hence the gap. Reaction to earnings, like the lady here, is was that a long or a short position you had there? It's hiding under the desk. But a key question to ask is, will a gap combined with prior price pattern force investors to react on their emotions? It's not about the numbers, it's how the stock reacts to the numbers, and a lot of that is emotion. People getting caught with making assumptions to one side or the other and getting caught on the wrong side of a trade. But why do we want to trade earnings and earnings gaps? Well, gaps are often the beginning of a major move, up or down. A gap up after a down move could signal the end of a downtrend or the beginning of an upside trend. A gap down after an up move could signal the end of the uptrend or the beginning of a downside reversal. Things like inverted J-hooks, topping pattern, and the like. Well, these moves can be very profitable in the very short term. And when I talk about that, I'm primarily meaning day trades and longer term swing trades. And people tend to poo-poo the big move on a very long candle day. And I'll show you how you shouldn't necessarily discard that. You may not want to go long immediately, but you may want to keep it on your radar. Considerations. The first thing is not all gaps work. If you are going long or short, determine the price movement that will prove you wrong. So if you have a premise, a theory, that the stock is going to go up and it doesn't go up, it doesn't continue up, basically that's what a stop is. Exit the trade when you see that pattern develop and or get that price level. I've heard so many people say, "Oh, I'm going to short every up gap." Well, you can have your head handed to you if it's based on earnings. Not all down gaps are good longs. Not all gaps are filled, at least in the near term. A gap in the opposite direction of a recent price move tends to create a shock that can be exploited. And again, remember, this is on the backdrop of earnings. And when you get a shock in earnings, it flows to the bottom line. What kind of people are you going to be getting there? Value investors. People who have already been in that stock are going to hang on to it. I'm considering the long right now. They're going to continue to hang on to it. And those who were short the stock are going to have to figure out where they're going to cover. So you got a number of people who are very interested. Those who've been in it for a while, those who have been watching it, those who have not been watching it, and those who had shorted it. And each of those have different levels of interest. You need to note where that stock is gapping to. Is it up near a support or resistance area? What's the overall market doing? And what is the sector? Right now, the hottest sector is anything dealing with high cap, high tech. And one of the other things you may want to know is, does the stock have high short interest? Now, the effect of a gap on the stock price. Well, the reaction by an institutional manager if the stock unexpectedly makes a major move against them, up or down. If they were short, up. If they were long, it gaps down. The manager himself is going to be concerned, but their boss is going to be even more concerned because they have a continuous electronic machine that goes through and looks at their total risk. And if anything starts to get out of whack there and getting too risky, they'll come in there and they'll pound on that institutional fund manager and say, "What the heck are you going to do?" So they're liable to be able to stand that for a little bit of pain, but not a lot. And we need to find out how to exploit their pain. Well, some elements of a trading plan. You got to have setups. Now, we're going to do what to look for. We basically covered it. There's earnings list. We already know that when stocks are actually going to report before and after the market. So those are known events. So I go out every Sunday and I create a list of stocks that have good volume, and I usually use the ones with the high option volume, and then I find out the ones that basically are reporting on AM and PM and group them together so I know whether to watch and which days. Now, how do we find them? I'm going to cover that in the following slides. Entries and exits. You get a good entry, you've got the potential to make a profit. You make a bad entry or a trap, you have potentially big losses that could occur very quickly. One of the things that people do is they're very slow. It's human nature. They're very slow to admit that you made a mistake. And if you don't have that mentality, remember what we said back up here and said, whoops, come on, up. Determine the price movement that will prove us wrong. And when we see that develop, get out. Most people don't get out. That's your stop. Okay. Now, let's talk about high short interest. High short interest, define high. Some people use 20% of the float. Some people use, numbers of shares and people who are insider buying and selling. I just use float. And you can find that on a couple of places on FinViz or in shortsqueeze.com. And I use somewhere around 10%. So if I get an earnings gapper that fit the criteria that I was looking for those setups before, the reversals and stuff like that, 10% will work. Percentage of the float, I think it's a key factor. Traders that are short have to cover, and they add fuel to the fire. Now remember, the people who are interested in, the people who already have it, they're going to say, "Yay, I'm right," and they're going to hang on. That's greed. The others are fear of missing out. They're going to jump on it, and then these guys are just adding more buying pressure. All right, highs relative, but again, 8 to 10%. I'll watch it and see how it works. Then again, FinViz, you can look at the stocks individually on FinViz, or you can use a group, and that's what I do when I've got earnings. I'll put all of the stocks that are going to report earnings for one day, and my days are after the market and before the market. I clump together as one, because I am not going to trade after hours or pre-market. I'm going to wait till it opens, and we'll talk about that in a little bit. Or if you only want to know about one stock, you can go to shortsqueeze.com if you wish. And I usually compare those if I'm really interested in it, because you might have slight differences of the float. Okay. List of stocks with known events. Now, this is earnings, conference presentations, FDA, but earnings is where I get most of mine. I don't really, I'm going to focus really on earnings today or tonight, but I don't care about the stocks, about the unplanned events, and I don't look at finding stuff on the pre-market scan, except I want to know where those that are reporting earnings, whether they're gapping up, they're gapping down, or not going anywhere. And if they're gapping up, are they going up to a resistance level, or is there room to run? All right, here's what I look at. I look at on my brokerage account. That's here too on the left. And I look at bull gaps up in the pre-market to see that they really are continuing to go up on my LTA scanner. So how do I trade it? Well, I don't try to predict the earnings, and I only trade earnings if I had to sell in after hours or in the pre-market. And one of the reasons is that you can be exposed to rapid reversals because the conference call is key. If they report some earnings and just go numbers, that's one thing you saw. This Align, ALGN, moved up very sharply on the report of the numbers. It's about 270 to 295, 300. But once the conference call started, they must have said something that the traders, investors did not like, because it came back and went down below where it had closed, closed the trading day. One of the other reasons we have is that we have limited access to markets. Most of the time, you're only going to be able to trade against what other traders are doing at your broker, not national market. Now, some are a lot better than others. Things like IB, even Thinkorswim does a pretty good job, but there can be some differences. So you could get wide bid-ask spreads, and you could have limited liquidity. So don't play that game. You can get trapped very rapidly. All right. Another thing I do is I use the 5-minute opening range. Here's where Deere gapped up from 143 to 148. Now, this is back a while back. We were talking May, but it gapped up. It didn't have any follow through. In fact, what it did is it gapped up to here to about 148, 148 and a half, and then continued to go lower. Since it did not break the 5-minute high, and the high could be the tip for the tip of the candle, the wick, or it could be the body. You have to decide which one you use, but it didn't get anywhere near that. So I wouldn't have gone long, and I wouldn't have advised anybody to go long on this one. If you use that 5-minute opening range and hang on for 5 minutes and make it break a 5-minute high, you'll win more than you don't. Gap and crap. This is lows. Here, this is a daily chart, May the 19th. It gapped up. Where did it gap up to? It gapped up to resistance. I was watching that and I went, no way am I going to trade lows, because it's already run up close to this gap. Now, if we'd have been down here and gapped up maybe to about 115 or so, I might have been able to day trade that or swing it long. But since we gapped up that resistance area and guaranteed here on the 5-minute opening range, it never broke up. So it told me we were likely not to break out based upon the daily. And I start all of my trades on the daily. Gap and snap, that's where it gaps down and snaps back up. Well, Steve, you said that earnings gapper down, they're not all filled, don't go long. I didn't say don't go long, I just said they aren't always going to go long. And what you do is you see here on the 5-minute chart, it got above the 5-minute opening range on the third candle. Now, do you feel like it's going to have enough legs to get back up to even or not? I don't know. Watch what happened when it got up to 144, which is basically where it closed on the prior day. Now, let me grab my tools. Yeah. Screen raw. All right. When it got up to the prior level of the close, we ran into sellers. So all these people who were underwater here from the previous day, they said, Lord, please let me get out even, and I will not do this ever again. Well, once it ate through all of those sellers, then it started moving higher. And you notice how this is the 3, 8, and the 17 exponential moving averages. Once we started that breakout, we would have move up, sideways, and if I put this on a 15-minute candle basis, let's see here, you would have basically moved up like this, moved sideways, and then move up, and move up. This is a breakout. This is a 1, 2, 3 continuation pattern, where 1 is the big wide range bar, 2 is something that approaches a doji. It could either be a doji or anything near it, and then you start a move back up. So it's a 1 move up, 2 sideways or slight pullback, 3 is the continuation move. I love those. Why? Well, first of all, my stop, if I get in on this candle right here, the first breakout candle, there's my stop. I don't have a stop all the way down here. I've got a stop right close. And I know right away that if it flips back down the other way, I'm out, and I've not risked a whole lot of money. Whoops. There we go. Come on. There we go. All right. Many times a gap up or down will go to a support level. We already saw the resistance. Well, the gap down in G&W, Genworth, went down to the $3 level, which it had been twice before. Well, it went down there and it started to form some support, and I wouldn't have been surprised. Here's what it is forming, though. You got to move down, you got to bounce. I would not be surprised if it rolled over as it gets to the 8 or the 17 exponential and rolls over. And watch for that. And if there's enough distance between that rollover point and the support level, you can go short before you get the break of that support. In this case, it wasn't. 10. There we got that gap up and the strong move. I've heard many, many times traders say, oh, this one's moved too much. I can't go long. It's moved 20%. Well, what did it do afterwards? Even day two would have been a good entry here. It proved that it was going to break out. I probably would not have gone long, except maybe early in the day when it was down below 10 and at least taken partial profits at $10. If it had high short interest, I might have jumped in at the beginning of the second day. Notice how it backed off a little bit and then started moving. 45-degree runners after earnings days, big move ups, get a break of a downtrend, relatively high short interest, and or break above a resistance level or consolidation. If you get any or all of those, the more you get, the more you're going to get the 45-degree run. So in this case, this was almost a no-brainer. And how long are they going to run? 4 to 5 days. This was 1, 2, 3, 4, 5, 6, and it crapped out in 7 days. This was an extra long one. All right. And I do use my Stochastics RSI, but I'll have you go out to my YouTube channel and do a search for Stochastics or Stoch RSI, Stoch RSI, and you'll find a 45-minute to 1 hour discussion on how I use that. All right, let's go on some day trading examples and swing trading example on earnings. This is an earnings play on Java a few years ago, and it gapped from 850 to 9.25. That's a huge percentage move, but it moved up in 2-minute charts. In the first 5 to 6 minutes, it had a high of 950, and I said a break over 9.5. I'm doing my plan for that first 6 minutes of the day, 5 to 6 minutes. I'm looking in here and going, if it breaks over 9.5, excuse me, I'm going to go long. And where's my stop going to be? 9.25, underneath that candle that brought me in. Why? Why do I not? Let me get a red color here. Okay. Why do I not have it down here? Well, if it goes up this way, gets over 950, that should be green, then starts to come back here. Do I need to let it go all the way down to this $9 level to prove me wrong? No. I was expecting it to move higher and continue to move higher, but it didn't. So as soon as it gets below 9.25 or maybe even 9.35, I'm out because it's not doing what I expected. I can always get back in with very low commissions now. We can do that. All right, what happened? Well, as it started to move up, it moved up a couple of candles and moved up. My goal is to sell at 2 times my risk. Now, what was I risking? 25 cents. So once it goes up around 50 cents, from 9.50 to $10 or somewhere thereabouts, I'll take half off the table and then move my stop up to break even on the rest of what I have. Well, I sold it for $9.98. Why? Because I expected to run into sellers at 10, and I wanted to be one of the first sellers there. I didn't want to be sweating and maybe only get 980 or 975. So I got just under 2, got close to my target. Now what am I going to do? Well, here we go. There's $10. Then what does it do? It does a little pause pullback. Now again, this is switched over to a 5-minute chart from the 2. So this is the 5, this is the 5. Then we do, it has to do what? It has to digest that move from 8.5 to 10. 10.25. So it's not surprising to me that guy paused. Well, my stop right here for all of this time, let's go over here, get my color again. I went long right in here. Well, when I moved my stop up to break even or broke even plus a little bit, This stays my stop until when? Until we start to get the move higher. Then, once I get into this candle here, that's when I can move my stop up to this level here around 975. And once it moves up higher and proves itself on this candle right here, I can move up to a little bit below this candle along in here. And you have to decide whether it's going to be here, here, or here, or where you're going to give it how much room. Well, once you've got profit in the bank, it's a lot easier. And then but I've also learned that this is the 8 and the 17 exponential moving averages. They will tend to move on those kinds of waves. I took my other profits at just under 11. Okay, and then so I had 3/4 off the table, and now I've got a quarter. I want to see if I can get a big runner. So that's where I'll try to let it run. People say, well, what do you mean by let it run? Well, widen your stop. Have a pivot trailing stop, similar to what we did before, but make sure that they're maybe on a 5-minute or 10-minute or 15-minute chart. Excuse me. Well, this was the opening. Zoom up, pull back. Zoom up, pull back. Zoom up. It went to 12.5, and it pulled back, and it looked like it was getting a little tired here. So I moved my stop to 1150 on that last 100 shares. I only had a 400 share trade, and it stopped me out at 1150. So I took money off the table at 10 and 11 and 11.5. Could I have gotten close to 12.5? Yeah, if I'd have been perfect. But I was hoping the possibility existed that this would have come up and gone that way, but in fact, it did this. Okay? I took a risk. But what did I risk? I got less profit than I would. Was this a stock trade doll? This was, gosh, I think this was back in, right here, 2011. 9 years ago. Yeah, 9 years ago now. Could have possibly been an option trade. I tend not to do option day trades. Intraday, I normally tend to only do stock trades because they're a lot easier to get into and out of. You don't get the bid-ask spreads, as well as the minimum you could get is a penny. Most are a nickel, but if they get fairly expensive, they can be 10 cent increments with 30 or 40 or 50 cent wide bid-ask spreads. Because remember, the market makers here are going to pad. They don't necessarily know where it's going to go. They have an idea, but they're not going to lose money. They're going to, as soon as this thing gets a lot of volatility, called earnings, they're going to pump that volatility in, and they're going to put 40, 50, and 60 cents into that, and I'm not going to give it to them. Sorry, you asked what time it was. I told you how to build a watch. All right, Hal day trade, similar thing. Figure out where you want to go long, where your stop would be. I chose that since it gapped up so much, I was going to go long above the body, and I was only risking 20 cents in the trade. So then my first target would be 40 cents on top of 54.10 would be 54.5. Sell that, trail out the next, and when it rolled over here around 55, I'm out. So I got 2 times my risk and then 4 times my risk. And I can guarantee you, if you can continue to get 2, 3, 4, 5 times the amount risk, you will make good money. Now again, this is really talking a lot about day trading. But what if you used a 30-minute chart on Hal? Well, you could swing trade this puppy intraday. It went up, it went sideways. It went up, it went sideways. Up, sideways. This is continuation moves, continuation move. And it did 3 of them. Now, after about the 3rd or the 4th time it does this, you know, you're probably asking it for do a lot. If you hadn't got in early back here and you try to enter on the 3rd or the 4th move up, you're probably asking for it to do a lot of a move. Okay, so that's when I'll use the average to range. And the average to range normally might be, in this case, was $1.36. Well, on earnings and stuff, I might see it go twice that. That means $2.60 on top of 53, be 55.60. You're getting up here to the 56 and a half. You're starting to push what it's going to do in a day. Just to be honest with you. So I'll use kind of my rule of thumb is I look at average to range, and it will move anywhere between 2 and 3 times that. And now again, that's average. So nothing ever is average, but you have to judge it yourself. Trailing stops, 15-minute chart. This is on when I got in. Now this was an option trade, doll. How do I determine my trailing stop? Well, we're going to talk about that. You get your money, Ricky P, here in just a little bit. I try to use swings. Okay, and before, it's really easy to see it on this 5-minute chart here, but it could be on any chart time frame you want. 5-minute, 15, 30-minute, hourly chart, even the daily. Pick out where the support level is. This is, obviously to me, this is support. So I'm going to have my stop at or slightly below that level. Once it moves up here, if it starts to move too high, it has not pivoted again, well, I have to decide whether I move it up or leave it still down here. Well, I'm probably going to inch it up with, look at day trade, right? I'm probably, when it starts moving, we're at the end of this candle here, I'm going to probably move my stop down to here. And because it's just, I'm not going to give that much back. But you got to decide how much. But the idea of a trailing stop is that you let it pivot. So where would the pivots be? Well, there's pivot number 1. There's pivot number 2. And if this is the low, which it wasn't, that would be pivot number 3. So up, back, up, back, up, back. Now that's the traditional trailing stop method that I've been taught using pivots. And that one works really well, but you sometimes, if you can get a move from 10 and a quarter up to 11 and a quarter there, man, I'd really be hard pressed to leave that all the way down at $10 or $10.10, well below where it got up to. I don't want to give that much money back. Tom asked, do you use the same rules for trailing stops and options you use stock rate? Absolutely, because all of my trades are based upon the trade of a stock. I don't care what the option is doing. I'm trading on price pattern movement on the stock. So if I'm using, let's go here, we're going to use the option trade on win. I don't remember what the option trade was, and you notice that I'm telling you based upon the chart of the stock. But I didn't have enough money to go buy 300 or 400 shares of $200 stock. So what happened is, there's the breakout level of 5. I went long. And where am I going to go? Well, I let it run. I kept moving my stop up on the pivots. Now let's pick out where those pivots are. Well, this is kind of a pivot. We know one of the pivots was down here, but obviously I just used a more reasonable number. I don't need to let it get all the way down here for it to prove to me that I'm wrong. And then it kind of moved up and then paused. So it went sideways. So that would be my pivot. It went up and went sideways and then moved up again. Somewhere around in here would be my pivot. Then it moves up, and now we're at the end of the day. Now this stock has gone from 180 to 195. I've got a significant amount of profit because I'm using weekly options there. So I took half of my profits. So what it would have to do is crap out on me the next day for me not to make money. But I did want to put some money in the bank. I didn't want to be too greedy. Well, it gapped up the next day because some people, I'm sure analysts did upgrades to it and people found out about it and they started buying it. And let's go see what happened. Well, this is the daily chart. There was the first move and there's the second move. It went up and it came back. Well, I still had my stop way back here at where a little bit under what I guess it's about 195-ish. Whoops. Yep, 195. I almost got taken out on day 2 and on day 3. And it started moving higher. I mean, okay. Then I see on day 4, again, anywhere but 3 to 5 to 7 days is about all these runners are going to do. And it had a run up into earnings, did the earnings, and kept going. So actually the move was 1, 2, 3, 4, 5, 6, 7, 8, 9 days. It's getting a little long in the tooth, fellas. So I use this as my stop point. All right. In the middle of the day, on that third day, the bottom fell out. What the heck just happened? Well, that was news that Stevie Wynn was accused of having improper relationships with an employee. And they don't like that, so my stop got filled and I had to sell out in what I could in the options. So I didn't make a whole lot of money there. I had to give a lot back because it started expanding the spread. But I still made a bunch because I had the options from back down here. So I didn't get killed, but I probably should have taken another quarter off the table somewhere along the way. But I didn't. All right, I'm going to go over some of these, what I call 45-degree runners, which we've got a little bit of a glimpse of already. Here's Zillow. This is May of 2019. Gapped up on earnings and then pulled all the way back. Don't discard this one because it maintained that same movement up. It got a little over exuberant on the earnings day, but then it started to climb back up. This one would have been a perfect one to play that 45-degree runner, or these high volume spike days do like to get retested. So if I get up and get going that second day after earnings, so day 3, excuse me, I'm willing to go long with my stop somewhere down in here and watch and see what it does. It did a move up after the earnings day. Well, you can call it before that. It went on earnings day number 1, 2, 3, 4, 5, 6, 7, 8, 9 days. And then it basically went sideways. Then it started another move up. Then it went sideways a lot longer. And I don't know what it did after that. This was last year. Zillow again. Gapped down on earnings in August of 19. Gap down. Watch what happened. This is basically the inverted 45-degree run because it went below the body of the prior day and kept going lower. How many days? 1, 2, 3, 4, 5, 6. Then it did a little waggle and it tried to trickle lower. The move that you want is right here. I do not like to be in those right there because that's just agonizing. Agonizing. I want to find the quick 45-degree moves and move on. All right. WCN, same thing. What's it forming? Oops. Okay. Do you see the inverted J hook going on here? Down move. Rebound. That rebound is somewhere around the 50% level. There's Fibonacci's for you. And it rolls back over. That's what I'm looking for. I'm looking for the failure. Probably below about 92. And then it'll go down and retest this support level again. If this comes down and then rolls back up, there's your double bottom. But I'll take the profit between these two levels here. I'll take it any day. And I'm looking for those. Twilio. Gap up. Big gap up. People say, no, it's way too far. Got to let it come back. Okay. What would we have given up? If you bought on day 2, not even on that first day, but on day 2, you gave up somewhere between 175 and 190. If you did an options play on that, you'd make some decent money. You don't have to go out 45 to 60 days or even 30 days. You can use a monthly or weekly. You can use 14 to 28 days for me. That's what I do. It wasn't seeing what you saw 1, 2, 3 as well. Well, let's look up. Okay. Yeah, but it's a 1, 2, 3. Well, 1, 2, 3. Not really. Are you talking about 1, 2, 3 to the downside? No, because I don't see a pause anywhere. There's a pause here in the middle. There's a pause there, and obviously there's a pause there, but the pause really could have been here if you're looking at that pause and that. But you see, I'm trying to look at the earnings and the gap. And yes, this was a 1, 2, 3 move. You're right. And that's probably a good call on your part. I wasn't looking for that. Right. All right. Good job there, Barry. But again, the spreads can get kind of wide, especially if you're talking about earnings, Barry. Take a look at one of the earnings plays and earnings stock, if you haven't already, and see how big the spreads are. Tom asks, do you use the same rules for trading stops and options you would in stock trade? I do. And here's the deal. The reason I do that is I'm not looking at the price of the option. The price of the option will take care of itself. I'm using the price of the stock. I'm using the chart on the stock. Because a lot of times options don't trade, so therefore they trade sporadically, and they may have groups of at a certain price level, but you don't see when it moves gradually up. Right in here, as it moves, it can move up 45, 50 cents, a dollar, and it didn't even have an option trade in it. Or right in here. So watch. You're using options, at least in my opinion, that's the way I trade. I use options as my trading vehicle, as to adding leverage, because I can't afford to buy 500 to 1,000 shares of a $200 stock, or I don't want to. So what I'm doing is I'm using that as the vehicle, but I'm trading off of the price action based upon the stock chart. Does that make sense to you, Tom? Kevin, if you're going about 30 days out on options, what delta? I do try to use a 0.7 delta, but with earnings and stuff, I may not be able to do that. With earnings, I mean, I'm not sure what Barry does, but basically, if you're betting on it to continue to move up, anything above about 0.5 to 0.6 is good, is fine. Because if it goes up, it goes in your direction, you're going to make money. Now, you're going to make more money if you do a zero point 0.7 or 0.8 delta, but you may not like the price. And usually what I'm dealing with is $150, $200, $300 stocks. So if I'm going to day trade it, I can back off on the delta a little bit, but I like to make sure over 0.5. You have to figure out what works for you. Some people would absolutely, Doug Campbell would croak if he heard me say that. You're welcome. And he probably is right to croak. Here's what Twilio did. Remember when we were looking at the daily? 4 to 5 days. But if we went back here, it's another 2 or 3 added on. Well, this is a 5-minute chart. Now, wait a minute. It did this gap up, and then, it went from $120 to $150 on the gap up. I'm not going long that one. Well, if you entered above, if you weren't bullheaded, and you went long over the 5-minute candle, and maybe had halfway down that candle or below the candle that brought you in, that's what I use. Usually the worst of those is below the low of the candle that brought me in, or below the midway point of the prior candle if it's a wide range bar. And then watch what it did. It moved up 7.7% in 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes. Oh, wait a minute. No, Steve. It gapped up too much. You can't go long that and make any money. And you have too much risk. No, I don't. I'm risking from, 156 to 155, $1 a share, and I could convert that over to options. I'm not going to let it go based on a daily. A lot of people are looking at us on the daily and said, well, I've got to give it all the way down to here. No, you don't. Not in my book. I'm not. You might, but I'm definitely not. If you're on the daily, the people will use the daily dot. Well, this is a volatility stop dot. Well, on the day that you're actually doing this trade, your volatility stop is there. And it doesn't move up to there until the day is completed up there. Well, get off of that 1-day chart and get down onto something more reasonable. Maybe a 20 or a 30-minute chart, 15-minute chart, 10-minute chart. Depends on how you're going to trade it. If you want to swing trade it here, you can still wait for day 2, see that it proves that it's going to break out, and follow the dots. But I'm going to be really following the 8 exponential moving average, pretty much. And once it did on this pattern right here, flattened out, this move is pretty much done, except down here, it went sideways. What do you think happens? What's happening here with price going sideways and pulling back ever so slightly, and my stochastics RSI going down? For those who have heard my stochastics RSI, they know that it's setting himself up for a breakout move again. Move up. This is move 1. It's move 2, move 3. If instead of doing this on a daily chart, you did this on a weekly or 3-day chart, it would be like this, like that, and like that. So 1, 2, 3. Continuation move. You've got to be able to see these in different time frames. Yeah. All right, here's Tenneco. Now, Tenneco reported earnings on this day right here. I didn't go long because it ran up there very, very quickly in the day to the $10 level. I said, you know what? It doesn't have enough room to break out. I'm going to watch it, though, for day 2. Well, I entered on the breakout level in day 2, 10-something, and I wrote it up taking pieces off as it went up here to 14. What's wrong with that? What it is we said, it got my attention. I watched it, and where was my stop? My stop was really tight. It was only maybe, I think, just under 10, 975, 980, something like that. It was about 10 and a quarter along. I was risking no more than 50 cents a share. And it already proved to me it wanted to break out. Now, there were a couple things in favor. One, it surprised on earnings. Number two, it had high short interest. Looks good to me. And oh, by the way, it broke above the consolidated prior resistance level. That's 3 for 3. It was ready to rip. You're right. All right, SRPT. Consolidation. Gapped up on earnings. Ran above. Whoops. I can see that as the top of my consolidation. There's the resistance. It broke right through it. Even if you got in on day two. Now remember, all of these 45-degree runners I'm showing you are not entering on day one. They're actually entering on day two. If you got in on day one somewhere, like on this one, you could have added yourself another couple of bucks. And it went up, up, up. It went down, up 1, 2, 3, 4, 5, 6, 7. And then it started pulling back. And where did it pull back to? 17 exponential. But the trade, the safest trade is there. It's proven to be, and I think SRPT also had relatively high short interest. Really, the perfect trade would have been to go long 125 towards the back end of day one. Let's see if I can talk faster. It's already 8:53. Square, gap up, move up. Didn't move a lot, but with an weekly option trade, it would have made money. Gap up, not really much of a gap, but on earnings, moved through that resistance level. There's the key. There's Sprouts Farmers Market. There was a prior swing level. It did what? Over here. My favorite pattern. Move up, pull back, J-hook, and explodes higher. And there's earnings, and it moved out. So even if it's not on earnings, you get this, maybe the earnings, if I remember right, I think this was the earnings day, because there's the high volume. It moved up, and I didn't get it until it did the pullback. But we had follow through. What do earnings do? All those value investors are going to try to come in. And they come in with lots of money. All right. Ring Central, RNG, gap up. On earnings, you see the volume there. And on day one, it kind of held its own. Didn't follow through to the upside. But on day two, it did 3, 4, 5. And day 6, got all the way up to about 250. Could have made from about 230 to 250. Again, 45-degree runners. Apple. I'm not sure what this is. Might have been the release of one of their Apple phones because it's November. Not sure. It could have been earnings. But it sold off and then rebound. And when that happens, I want to watch and see if it can break above that level right there, 250. It's a long. And I'm not going to stop down here, guys. My stop is right in here. And it took a few days. It went up and sideways. Continuation move. Move up. Move sideways. And then trickle up to there to about 270. AAXN. Axon Enterprises. Gapped up from the 50s to the $65, $70 level. It was in resistance level. Do not go long there. See what happened with this big wick. but watch what happens over the next few days. It eats its way through all that supply and it explodes. If something gaps up too much for you, keep it on your radar scope and watch for the next 2, 3, 4 days until it fails. And where would it fail? To me, it fails when it gets too far below the low of the gap day. Once it does that, I take it off my radar scope and don't even watch again. Okay? Let's see if we can go faster. It got up there, and in fact, this is Axon in November 19, and this is in May of 20. Well, back in 2019, it got up here, ate through supply, and broke out. Well, it'll do it again, right? Not necessarily. It gapped up, went up to that thing, and then failed. Where did I write it off? Did I wait until it got all the way below this level to write it off? No. I wrote it off when it did that candle right there. That was just too much for me. I'll move on to the next one. And earnings season set these up. So even if I don't trade the earnings day, I can trade after earnings. Barry, do you use the volatility stop indicator to help determine support and resistance level? No, but I use them to help define, for me, it's a nominated or notional stop level. Reds are when I'm short, greens are when I'm long. I said nominate and notional. I'll decide based upon the price patterns. But no, I don't use those. I use price, where price is, and I'll show you a little bit when we get into individual stocks. I get on my Thinkorswim. I can't show you in here on TC2000. It doesn't show it very well, but I'll use volume at price levels. Hey Amos, how you doing? All right. Sorry we couldn't meet a couple of weeks ago, but I want to make absolutely sure that my son didn't have COVID-19 and I gave it to you. So better safe than sorry. All right. So what did this do? Here is our top level in Allogene Therapeutics. It gapped up and ran. 45-degree runner. What a beauty. Even if you entered on day 2, you could have gotten long from around 42 and gotten $6 or $7 there. Yep. Once it gapped up here and got over the 5-minute high of the day, why don't we just go long? Use that 5-minute entry. Here's Beyond Meat. Now this one was it has a very, very wide average to range. $12 a day. 9%. Not for the faint of heart. So you're going to have to give yourself a wide berth when you do that. If there are certain stocks like this. But overall, it did a 45-degree runner. It was a little ragged. And there are times in there where you might not have been very comfortable. Like on this day right here where you had the semblance of a shooting star. But in fact, it was negated by the gap up on the following day. All right, let's see what intraday runners. We've covered those a little bit, but I want to point out a few things. One, it gapped up and went sideways because they had a conference call in the middle of the day. I absolutely despise companies that do their conference call during the middle of the trading day. I want it in after hours or before in the pre-market, because I don't want to be in the middle of the stock and have these things gyrating all over the place during their conference call. But guess what happened? If you'd watched it and put an alert here at 40, you could have made a pretty good pop. Now, this one had over to the left, it had resistance that had to eat through. But on here, I wanted to bring this up because of the conference call. I skip them until after the conference call is over. Here's BGS. Again, 15-minute chart. So I've been 5 minutes before, 30 minutes before. Well, here's 15. This in the middle of the day, and then suddenly it starts moving. Well, it wasn't a gap up. I don't even know that it was on earnings, but something happened. It was a news event, and it started moving. All right? But when you break out, get behind the breakout. Zillow. There's the 5 minutes. We've covered those. Let me see. This is that LO again. That was on a 5 minute chart. You notice how it kind of rode. It went sideways and it rode the 8 exponential up. A lot of people say, oh, well, it waits for the 8 EMA to catch up. No, it doesn't. It's trying to digest this big gap from 32 to 38. Get real. So the fact is that if you want to use the 3, the 8, and the 17 as training wheels, and it maybe even on a intraday basis ignore the 3 and use the 8 and the 17, that's fine. Once these things are side, looks like a road or a railroad here, there's the trend is up. Find a way to get on board this puppy until it starts to peter out. Back in here around 11:30 to 12 o'clock, notice how these are squeezing? Don't go long and think about taking profits along in there. All right. Covered this already. LTA scanner. I use the LTA scanner. It's a product developed by one of our buddies at Hit and Run Candlesticks. They have a free webinar every Wednesday at 2. You do not have to be a member there to attend, although it probably would help if you did. Christina, yes, they give out trade alerts. I don't post mostly. I post some. Rick and Doug do. If you're a member of Hit and Run Candlesticks or Right Way Options, I'm going to cover in just a minute, you get a free trade alert. So if you're not in the room, you'll get it on your phone, whether that's iPhone or Android. You can get alerts of what they're trading. Now, I only use those as suggested trades. I don't agree with all of them. I agree with most of them, but not all. I'm going to take my own trades. And some of the trades I take, they don't. I tend to day trade some futures. I trade options, and I'll day trade stocks. So I'm doing a lot. I spend a lot of time in Hit and Run Candlesticks. I'll see what I can do. Hang around to the end, Christina, and we'll do that. Okay, the LTA scanner. There's 2 things you can get here. One is the guides on. If you're interested at all, this is where I watch my stocks intraday and come up with trade ideas during the day. There's the 2 guides. And if you're interested at all, if you want to try to sign up, it is $147 a month. You try to use that one. I'll get a little bit of some brownie points in my quota. If you use that, it lets them know that I was the one that referred you. A lot of people say $147, let's call it $150 a month is a lot. I used to pay $250, $300 a month. Rick and I did. And we thought that was pretty good until Ed developed this product that is easier to use, more customizable, and is half the price. About. Maybe just short of half the price. It is a good deal. There are no trials, but it's on a month-to-month basis. If you try it for a month and you don't like it, you can quit. But you'll be grandfathered in at this forever. There are people that signed up at a lower intro price when they first started, and they will be at that low price for the rest of their duration, as long as they don't let it. Have I ever studied Joe Ross's techniques? No, I don't know who Joe Ross is. Sorry. Now I'm going to open up. We've had a few. Thanks, Mary. I do too. I also was helping kind of define a lot of the stuff about the LTA scanner too. So, do we have any questions on trading earnings and gaps? I kind of mixed them together, but trading earnings to a positive or a negative side, you're going to get gappers. I'm going to wet my whistle here real quick. There we go. 9:07. Do I have a one-on-one trading class? Trading or training? I do one-on-one training. Yes. Okay. All right. Let me. Pull this over here. Okay. Go to hiddenruncandlesticks.com. Go under training, private coaching. Go down here and find this nice smiley face here, Coaching with Steve. You click on it, it will open up a new window. It'll tell you a little bit about them, tell you how to get a hold of me. If you're a member of Hit and Run Candlesticks, you get a 15% discount. Here's my cell phone number, and there's the number for. Why am I getting music? It's coming from here. Stop that. Okay. All right. Top Gun Trading 2 at gmail.com. If you send me an email, I'll be glad to get back with you. There's free consultation, so no problem. And make sure you put in coaching as the subject, and I'll make sure I'll see it. All right. And we're going to try to set up, I've had one or two of these already. I'm going to try to set up a group coaching session where we get up to 10 people in a group, and we'll have a session. But if you want one-on-one, 2 hours would be $497. But guess what? You take out that trial that I'm going to talk to you about in just a second. It'll take your discount, and you'll be basically paid for. All right, let's do this. All right, just fire off an email, Christina, to me at Top Gun Trading, the number 2 at gmail.com, coaching in the subject, and we'll be happy to do that. All right, let's go ahead and talk about the economic reports. I'm getting a little long-winded tonight. I apologize. We got a little bit coming up besides earnings this week. CPI, how the economic stuff like industrial production, maybe even something like the Small Business Optimism Index or consumer sentiment, those might have extraordinary effect that they wouldn't necessarily normally have. This is Earnings Whisper's idea of the earnings for the week. I got my own. We've got PepsiCo. We got really the kickoff I use as JP Morgan on Tuesday morning before the bell. Then we've got more banks and United Health on Wednesday. We've got the ones in yellow are the ones with high short interest, like Sleep Number and OMC. Bank of America on Thursday. Johnson & Johnson. Fleabay after the hours on after hours on Thursday, I believe, and Netflix, Microsoft, and SGen, Seattle Genetics. I think, let me try one more thing here. I missed off one line, and that is this Ally. There's really not anything on Friday before the bell. They're always Thursday. But I'm sorry I cut that one short on you. But see, I remember it. And one of the things that happens, if you create your list on the week before, you zoom through these, you know that you've got pretty much all the big ones you might trade that have earnings that week, 5 days or less. And you can remember those, or at least I can. Market overview. Let's go to the market overview and then we'll get to trade ideas. Okay. Down. All right. Crude oil. Crude oil has come back from $10 to $40. We're in this, pushing this gap level here. This $40 is the bottom part of that gap area. So we're really, really trying to punch our way through it, and we're having a tough time. But if you'd asked me back here that we'd be back to $40 in 2 months, I would have told you were crazy. Gold. Gold sold off with the sell-off, got back up to 1,700, and now over the last month, we've had a little bit of a run. It is in an uptrend, so the gold bugs, we've got a couple of them in our room. They're also doing fairly well. Now let's look at the indices. I'm sorry it gets a little busy in here, but I'm trying to track where the indexes might be going. Now, if you think back, I said a while back that I used volume at price. These are skyscrapers sitting on their side. This is where the highest volume in these days right in here was right at this 28.28 level. And here was 30.59. And here was 31.17, 31.18. We tend to move from the jump from top of skyscraper to top of skyscraper. And what I'm doing, and I've been pretty good, I'll pat myself on the back, of being able to predict using my stochastics RSI and this trend line here of where we're going. I had a lot of people were telling me over the last month or so that we were going to die, we were going to crap out below 29.75. Well, T2122 and my stochastics RSI were telling me no, we're not. And let's look here. I'm going to jump in real quick. These prices were roughly the same except for this excursion to Wick. And this was overnight, by the way, we basically went to 29.75 once and twice. Now I'm going to show you. This 29.75 occurred with us bottoming out in stochastics RSI. This 29.75, we bottomed out, but we bottomed out at a higher level. That told me, and with the volumes less, it told me we were likely to go back up. And where we were going to go, initially to the 31.50 level, that little area right in here, and then potentially as high as this. And we hadn't gotten there yet. But I'm seeing that we're pulling back, taking a breather, even though we're still going up. We went sideways for a while. I think we're going to 32.30. I don't see how in the world we do it. Maybe earnings will be better than or less bad or what. People are saying, well, we can't be going up because the coronavirus stuff is just eating us alive. Well, it is, but don't fight the charts. Do not fight the charts. Dow. Dow's another story. The Dow's only 30 stocks, and there are some big high cap stocks and tech stocks in the 500. The Dow only has a few, and it's been lagging. It's not failing. It got to this 249.50. It held twice. It did a double bottom, similar to the S&P, but it didn't break out. NASDAQ, there's been where the money has been made. Something as simple as the Qs. As simple as XLK. Not as much, But hey, go where prices are showing you the biggest potential. Now, Russell, kind of like the Dow. Now, the Russell doesn't surprise me it's doing this. The Russell is mainly focused on U.S. companies, U.S. Only sales, small companies, not mom and pops, but above that. Well, they're having trouble. People who are depending upon the U.S. economy are having trouble, and it shows. The others are multinationals, and the multinationals, they have different places they can go to sell. The VIX is down around 25. I never thought I would say 25 is a low, but it looks like we're trying to punch 25 and maybe lower. I don't know. All right, let's go over some longs real quick. I've got my trade ideas long. Let me go ahead and post those to the room. In fuego, huh? Sorry that I put them out on different lines. It just happens. Okay. All right. Amgen, pulling back. What am I looking for? I'm looking for maybe it to stop before it gets below 245. Looking at my stochastics RSI and looking for a bullish signal, maybe a bullish engulf, a doji followed by a gap up, morning star, some sort of candle pattern that gives me a bullish. I am not going to buy early, but I'm going to keep it on my radar scope. Comcast. Looks like it broke out on Friday. Really feel more comfortable on 41. Where do I think it's going? I think it's going back up here to the $43 level. But the key is going to be what happens when it gets to 41. It's a bit of a slow mover. Etsy made some good money back here. Sold it. Let's see what happens when she pulls back. Looks like it's going sideways. Excuse me. And the possibility exists that we could be setting ourselves up for another pop out of the box where it gets above. Oh, can't do that. You can't see green. Well, you can't see any of them. Let me draw. It gets above this level here, 115, and stochastic starts pointing upwards. I think it's a buy. I don't care how much it's run. It's a buy. FedEx, gap up on earnings. Now we're doing it gapped up to where? It gapped up prior level, and the volume point of control right here at 158. It's hanging loose right here. It's not giving it up. I'd love to see the stochastics RSI pull down to about the 50% level, and then it start to go higher, and we could break out to new highs. I don't see how, but we're going to do it. Maybe people are staying home and using FedEx online shopping. I don't know. Goodyear Tire. Get above this 925. I think we're heading for 10 and a quarter. Okay, Plug. Is 850 that low that it was going to make? Well, it's starting to try to form another J-hook. People said, Steve, this one's way too, it's run too much. It needs to pause. Well, will you take from 9.5 to 10.5? A few hundred shares at $1 a share there and put it in your pocket and then go? I say it will pull back. But it may not be until after it gets back up to 10.5. I don't know. We're going to see. If it breaks 9.5, I think it goes to 10.5. Come back next week. SDC, consolidating. Let's see. Are we on a 3-month chart? No, there's a 3-month chart. Gets over 8.5. 9.5 to 10 is my target. It's a fairly new stock. Tech. TEK, Tech Resources. over this $11 level, I think she runs to 12. UPS gapped up in sympathy with FedEx and gone sideways. Earnings, I thought was on my earnings list. No, I guess not. I don't know. It doesn't show up on the thing. But if I go over here, I see it's 428, it would have been 728. So we probably got some time. May have 2 or 3 weeks. All right, let's go and look at the shorts. Obviously, I always have the VIX and inverse ETFs in play. If the markets start to crap out, short the Dow, short the Russell, short the IWM type stuff would be looking at. I don't think I'd be doing the Qs. I don't think I would be shorting the SPY. This is a nasty candle, and if you look at the volume here, that was not mom and pop selling on Friday. Unfortunately, it's still kind of in no man's land here. If we went sideways and then moved down, I'd love that more. So if we could go sideways or bounce a little bit and then break this 48 level, I think 45 might be in the cards. And Stochastics RSI is kind of confirming that. DHR. Hate to put this on a short list, but if you did do it, you need to make sure that you really know what you're doing, you're on your toes. Because this was in an uptrend, and in a solid uptrend. It could pull back to this level around 181 and a half, 182, and still be a solid uptrend. And this Stochastics RSI, even though it's pulling back, it's not a V bottom like it was over here. It's kind of flat. That tells me that this may not necessarily be a big, deep, and sharp pullback. Okay? And QURE. This one looks like it's going to probably go back and retest the 44 to lower. So maybe 43 and a half would be in the cards. I'm having trouble finding good setups on shorts. I've got ones that have participated alongside that are going to give sell signals if you were long, but a sell signal if you're long is not necessarily giving you permission to go short. What do I scan? SB, I would have to we'd have to have another 3-hour session just to talk about that, but mainly let me see if I can find that real quick. Okay, here is my YouTube page. I got a bunch of videos on here. The last one I did on the 28th talked about Stochastics RSI. I would strongly recommend that people look at that one. Let's see. Yeah, okay. I got you. Hold on 1 second, Christina. All right. If you go to Top Gun Trading on YouTube / Top Gun Trading, then go in and search favorite. The very first one that comes out 8 months ago, my favorite chart patterns for both swing and day trading. One's 48 minutes long, one's an hour and 15. Free. Have at it. All right. And yeah, bury the pre-configured scans in the LTA. During the day, I'll use the LTA scanner, and I'm not going to go over that one. The links everywhere. No, Top Gun Trading was a. I had the own room where we did. First, we did futures, and then we did stocks, and we had we didn't really have enough interest of active people in there, so we didn't continue doing that. We may start that up again if people express an interest, but I do stay in the hit and run candlesticks rooms. I will bounce back and forth between Right Way Options, but I tend to stay in HRC, hit and run candlesticks with Rick most of the time, and post my trades there. Okay, but yes, I'm not affiliated with them. I don't work for them, but I'm loosely affiliated with them. It's a great room to be in. Great bunch of traders. Okay. How do I take... I don't know how in the world I take a picture of the pro trading room. Okay, here we go. Hold on a second. No, that's the dashboard. Okay. It doesn't look exactly like this, but you could actually get this on your phone. It has alerts that pop up. You sign in as a member of the room. You sign in, and then it sends you text alerts, trade alerts sent to your mobile phone. You can log in. It works better and see the room. It works better on iPhone, iOS type products, iPads. It will work somewhat in Android, but not as well. But mainly you probably ought to be in here on a computer to see this, Mac or either Mac or in PC, and sign up for the alerts, and you'll get immediate alert on your phone. So it really comes through as a text. Christina, if you are a member, we show you and we help you sign in for that. So there is no real app for the phone for the trading. So I misspoke. Yep. We're going to get to that in just a second here. Thanks for the lead in there. Get your $5 later, Mr. Ed. Hit and run candlesticks, $49 for 60 days, 2 months. You'll make that money back in one trade. You'll probably make your money back on the hit and run candlesticks on one trade or less. Only have to hit one or less winner in hit and run, in any of the rooms or in the LTA scanner, and you pay for it for the month. Give it a shot. If you don't like it, you can always cancel. I would recommend only signing up for either Right Way Options or hit and run candlesticks, and don't do both of them at the same time. You won't have enough time to be in two places at the same time. Try hit and run candlesticks. If you don't like it, go to Right Way Options. If you're an options person, try options first. If you don't like that, then come back over to hit and run candlesticks. All right, there's how you get a hold of me. I am also on StockTwits. I think I may have posted this already, but I'll post it again. And obviously, this is my YouTube channel. And there's a lot of stuff out there. And YouTube, if you go youtube.com/Right Way Options, you get a lot of stuff from Doug and hit and run candlesticks as well. Okay, I'm going to open up very shortly. I'll give us probably about 20 minutes for individual stocks, and then we're going to call it a night. Only one. Tell me if you're already long or already short, or looking long or looking short. Okay, let me get up here. Don't go down. Dolly wants to look at XLY. XLY looks like it wants to try to break out, and my stochastics are confirming that. Good volume on Friday. Consumer discretionary, you do know we're coming into earnings. So this one could kind of flip around, but it does look good. The only problem would be, where would you put a stop? May want to drill down to a 60-minute chart or a 30-minute chart and see what you get. If it pulls back here and then pulls back, goes back up, it'd be a beauty. Let's look at RTX long from Johnny M. I was short RTX and made money a week or so ago here. And, yep. Down, up, down. Down, up, down. Johnny, I don't see what you got an inside day here. It might be a sell if I was short, if it got above 60, 61. But until we get a breakout above this level of 64, I don't feel comfortable with it. Got all this overhead resistance here. All of these buyers here are underwater. Now, stochastics RSI says we're going to get a bounce, but this has got a lot of work to do. Others that have a lot of work to do in the same area, NOC, which is Northrop Grumman, I think not as much to an extent as Lockmart, but yeah, BA's not really a defense contractor totally. Okay. MT wants to look at MU. Well, I like that because I went long an MU credit spread on Friday. It's pretty much in a trading range. Let me see if I can get the frame right. Okay. That right there is the trading range. And I've got an upward bias on it recently, which is why I went buying any kind of bull put spread in here with about a 30 to 35 cents per dollar would be good. I was able to get it. Mine's a little deeper. I didn't get as much money, but it's probably not gonna fail. Famous last words. But it looks okay. But right now it looks like it just wants to come up here and retest 52. Okay, SP wants to look at Monster. Let's look at Monster Beverage. Yeah. This one's attempting to do a J-hook. If you went long, say above Friday's high, watch what happens when it gets to 73. I would take my first profit at 73 and ride the rest if you do that. KLH wants to look at Morgan Stanley. Now, what's the problem with Morgan Stanley? KLH. Earnings right there this week. Big banks report starting Tuesday, Wednesday, Thursday. So I wouldn't be doing it, and we may pass up on a good trade 7/16, which is next Monday. So you have a week. If you're okay with trying to trade up to here to 51.25 in a week, that's okay. But you'll have to decide. The problem you got is, where's the stop? Christina wants to look at BA, and I just flipped it over a second ago. BA does not look like a long to me. BA has this downtrend. It needs to break it, but I want to trade stocks in uptrends. So I want to see higher high, higher low, higher high, higher low. So I want to see a zigzag to the upside. So I want to see it do one of these and break above 189, then pull back and stay above this 170-ish level, and then break up again. So I can either go long right in here at this 179, 180 level, or in the breakout again. But I don't like to anticipate the break of that downtrend. Why? What happened here? That looked like it was going to break the downtrend, right? No follow through. It didn't make higher highs and higher lows. What it needed to do was one of these and do that. So until I see that pattern, I wouldn't recommend going long that one. David H wants to look at Shack short. Okay, let's see. Shake the Shack. Not from here, but it's set up. Let's show. All right. Oh, wrong color. Let's say that we get a bounce here. And we bounce up here to about this level here, about 50. And then it starts to roll over. Down, down, down. I'm looking for it to stop somewhere in here. And let's just say that it stopped at 50. I could go short with a tight stop and then try to hit the 48 level or even 46 or even lower. But right now we've got a doji, and that doji is a sign of indecision. Now if we open up down tomorrow and start trading down below Friday's low and Thursday's low, we're going to hit 46. What's concerning me, though, is that we're set ourselves up for a bounce. So keep it on your radar scope. Wait for the bounce and then the rollover. It'll probably happen. I know I have an idea you were in there, AABA. Costco. Where were we in Costco? We were on a while back. This kind of a W, but I'll call it a dented cup and handle, and it went up on huge volume on Thursday, went kind of nowhere on Friday. The stochastic RSI is pegged, so it really can't help me. The strongest of the strong will stay pegged, bottom or top. Weakest of the weak will stay at the bottom. The strongest is strong at the top. I think you're going to have to wait for a pullback. If this thing pulled back into anywhere in this area right in here, and I got a bullish candle signal, I'd be all over it. Because if it goes sideways here for a while, watch for an overall cup and handle here. This could be the cup. Whoops. That could be the cup. Or that could be the cup. Especially if you go to a weekly basis. And now I change the style, time frame. Probably more of a 3-dayer instead. Had a pretty darn good move here, but we're kind of late. Let's see if we can get back over here and do a 3-month chart. Okay. Really would have been nice to break out Thursday. Nice breakout. I missed it. That one's kind of hard one to enter. All right, now I'm going to put down no more signals, please. No more signals, please. Richard wants to look at Marriott short. The candlestick pattern is telling me that it's trickling lower. But what's happening every time I see stochastics RSI trickle lower, that usually tells me that we're gathering strength for a move to the upside. Not necessarily a long trade, but what you want to see is more of a V-shaped down move. It's not making it. Now, if it got below 85, yeah, then it'll hit 80. But right now, it's not, and it can't make up its mind. It keeps going up and down the same number every day. It is trickling lower. Well, let me go over here to. Oh, I forgot to mention T2122. We're still in pretty good shape here. Let me go to Marriott. Yeah, we're right below the 50. We're hugging it. If it had a really sharp down and sharp up and then sharp down, I could see how that happens, but I think we're kind of wallowing around. Now let me go over the ways I came over here, the EMAs. I use these to help show, and again, these are training wheels. Right in here, we're in a solid downtrend. Right in here, we're in a kind of a semi-solid uptrend. Right in here, we're in no man's land. We're kind of transitioning to no man's land here. And I'm seeing that on the chart. I don't necessarily need to go look at the moving averages to tell me that. And my stochastics also telling me, don't be in an all-fight hurry to go short. We're not seeing a V bottom. Now, why don't we check back in a few days and see whether I did well or not? Did I read the tea leaves correctly? Robbie, PayPal. If PayPal get to 175 and give us a bullish signal, yes. I still think we have a couple of days lower. Maybe it pulls down to the 17. Oh, stop for Monster. Well, traditionally, people would say you have to be below Friday's bottom. Personally, I couldn't give it that much. Let me see what the 60-minute looks like. Yeah, it went down, and on the second 1 hour, well, the first hour really, but it's pre-market. The first hour made the low. If we could come back down on Monster, if you could come back down to say this level right here, 71-ish, and then go back up, you could set a stop under 71. If it continues to go higher, 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 you don't have a technically defensible number, other than maybe the vol stop, but that's not where price goes to. There's price here is 71.70, and maybe here it's 71. The volume point of control is all the way down to 69, so I don't know. That one's a tough one there, SP. Tilray, last one. All right, let's go back over to a 3 month. Now, Tilray, I warn you, is a monster when it comes to volatility. %. Even though it's only 63 cents, it's 8%. We have this area right in here, overhead resistance to me. So I really I don't see it. And what are we looking at still? We're still looking at a downtrend until we get up and do higher highs, higher lows. Just remember, higher highs, higher lows, long. Lower highs, lower lows, short. If I don't see those, I can't go long or short. You've got to get yourself in a trend. All right, folks, I've kept everybody way too long. It's 9:45 at night. I still got to go eat my dinner. So I'm going to sign off now. Come join us in the room. I think you'll enjoy it. We have a really great time. We've got great traders. And all these eyes on the market will find good stocks to trade. And I will post this in the YouTube channel as soon as it gets rendered. And anybody wants to sign up or talk about possible coaching, Top Gun Trading 2 at gmail.com. Try that. I'll be happy to talk to you for free for a while. All right. You guys take care. Thanks for showing up. Bye-bye.